The UK, we go to the United States. It's not a good news there. United States national debt has surpassed $40 trillion, and this is happening for the very first time. Marks a new record for federal borrowing. Treasury data shows that public debt outstanding of about $40.047 trillion, and that's the figure as at this week. The milestone comes after the debt crossed $39 trillion in March, highlighting the rapid pace of government borrowing. So it's not just Nigeria that's borrowing. The debt has more than doubled in less than a decade, driven by persistent budget deficits, pandemic-era spending, tax and spending policies, as well as rising interest costs. Interest payments have become a growing burden on the federal government, the federal budget, with annual costs projected to exceed $1 trillion. Higher borrowing has also contributed to increased pressure in the treasury market. Investors demand higher yields to hold long-term U.S. government debts. Still with the United States, the country is considering cutting tariffs on Canadian steel, aluminum, and automobiles as part of a proposed trade agreement with Canada, as both countries move closer to resolving their latest trade dispute. Under the emerging framework, tariffs on Canadian steel and aluminum could fall from 50% to about 25%, while duties on Canadian-built cars and trucks could decline from 25% to 15%. The auto rate could be longer or after accounting for U.S.-made content in Canadian vehicles. And Norway is preparing for the possibility of higher U.S. tariffs after trade talks in Washington failed to produce an immediate breakthrough. Norwegian exports to the United States currently face an additional 12.5%. which replaced the previous 10% global levy. The Norwegian government strongly disputes the measure and argues that there is no justification for treating Norwegian goods differently from those of the European Union. The tariff applies to an estimated 67% of U.S. imports from Norway, excluding products already covered by sector-specific tariffs or other exemptions. Norwegian businesses, particularly exporters, face increased uncertainty as negotiations continue. For the third day, we're talking about bond investors and bond yields now. Well, investors are increasingly favoring Italian government debt over French bonds. Political and fiscal uncertainty, those are intensifying in France ahead of the presidential election next year, 2027. Italy's bonds are benefiting from improved confidence in the government's fiscal management and political stability, while French debt faces growing pressure from concerns over rising deficit, heavy borrowing needs, and political uncertainty. French borrowing costs have moved closer to Italian levels, narrowing the traditional gap between the two countries' bond yields. Investors are demanding a higher premium to hold French debt as the country prepares for a difficult budget debate and an increasingly uncertain political outlook. Still in Europe, German producer prices went up today, fastest pace in more than 3 years for the month of July, adding to signs of renewed inflationary pressure in Europe's largest economy. Producer price increases 3% year-on-year, accelerating sharply from 1.8% in June. This has exceeded economists' forecast of 2.7%, and the latest increase marks the strongest annual growth since 2023. And we hop to China. Property sector continues to struggle years after the collapse of Evergrande that exposed the deep debt problems facing the country's developers. Well, the country, once one of China's largest property company, defaulted in 2021. That made a big headline everywhere after accumulating more than $300 billion in liabilities. Its collapse triggered a broader crisis across the real estate sector, with other major developers also facing mounting debt and liquidity pressure. And those are the global stories for now.